Welcome to TheoTrade. This is Don Kaufman. It's August 14th, 2024. Just about an hour to go to the cash close here on this Wednesday afternoon. I want to start with the mere fact that we are still under the influence of volatility in this marketplace. Look, the S&Ps, they're up 20 right now. In fact, we're even hitting the upper edge of the expected move. Look at that upper edge of the expected move. It's tagged. I'll come back to that in a few minutes. But moreover, I cannot stress enough what we are in the midst in. We need to make the assumption. Okay, as I said, we're still under the influence of volatility. This is a rip your face off rally until told otherwise. But critical shift is kind of coming right now. And that's a critical shift in the kinds of data that we need to pay attention to. All right, let's start from kind of the beginning. Today's market action, it's a bit of a dud. I mean, look, CPI came out. It was the most anticipated number ever. There was actually a $52 expected move for today. I mean, what happened after CPI? Absolutely nothing. We went higher, we went lower, we laughed, we cried. The marketplace, though, has kind of been slopping around me. CPI came out, if you will, as expected. So what do you get? You get absolutely nothing. The market right now continues to drift, but the drift today, being positive drift, the drift today, though, is into, again, the expected move. So what's the big change right now? Well, the change right now is let's worry less about inflation. Inflation at this point, it's coming down slowly but surely. That's what CPI actually showed. So we're confirming probably a 25 basis point cut. And, it's the talk of the trading community. Who cares at this point? I'm going to tell you what the critical shift is about to be. You want what the critical shift is? Now you got to focus on retail sales. Everybody's worried about the economy. And this is going to have a dramatic impact. Literally tomorrow morning is going to have a dramatic impact. In fact, let me show you. I'm going to go to the SPX, okay? Because everybody right now is also talking about, look at the VIX, man. The VIX is getting crushed by another 10%. Yeah. Calm down there, cowboy, because for the most part, obviously today is still the 14th, coming into tomorrow, the 15th. What do you got? The right-hand side of your screen, ladies and gentlemen, still a $42 expected move. So the reason I say we're still under the influence of volatility, the shift right now is going to be to jobless claims. Okay, if there's any uptick in jobless claims, this marketplace is going to freak out. You've actually got retail sales. I would actually put a huge amount into the retail sales. Retail sales shows any weakness over here. People are going to scream deflationary. On top of that, on Friday, as much as it pains me, on Friday, you're actually going to get consumer sentiment, which is the University of Michigan. I mean, literally, it's like a survey of 420 people. What does it mean? Absolutely nothing. But the markets are still going to move on this. Tomorrow's data is actually really important. Okay. In fact, I can argue the fact that tomorrow's data is at this point as important, if not more important, than the CPI print. Even though the CPI print had a $52 expected move, you still have, again, this $42 expected move coming into tomorrow. That's big off of retail sales and like jobless claims. Jobless claims comes in every week. Nobody cares. They care right now. Everybody's looking for weakness in the economy. So as I said, okay, you are still under the influence, okay, of volatility. And that basically means you just need to assume, right, for all intents and purpose, that this is, and again, I'm going to cruise over to the spider, it's easy to see. Okay, it's a nice bounce back. It's a rip back to the upside, right? No question about it. But at this point, risk reward heavily favors the downside. Like, I'm not going to diminish, and I don't want to diminish the upside potential in this marketplace. Okay, but given the fact that if you just look at this on a percentage basis, in fact, I'll bring up the S&Ps from this. Okay, from absolute low that we hit, of course, last Monday to present price, you've had a 7% rally. Okay, got it, 7% rally. Right? Is there more upside potential? Absolutely. Let's get crazy. Let's go for a straight up. It's a 10% rally. Okay. So there's some upside opportunity over here. But at this point, there's huge downside risks. And the downside risks are not just like, looking at a chart and being able to determine we've gone up too far. Okay. It's not that. The downside risks are going to be found in the data. And that's why I'm saying it's a critical shift. Shift your focus or you're going to get run over. Moreover, I know everybody's actually focusing on VIX. I was just poking fun at it a moment ago. It's a magnificent volatility crush. VIX is a function of SPX, 30-day vol. It's an equation. Okay, you want more context around volatility, you got to start looking at things like vol futures. And I will give you this, the volatility futures came out of backwardation, okay, but they're not normal yet, not even close. So the volatility from the 7-day out here to the 35-day, okay, that vol has kind of flattened out. I wouldn't say that, you know, we're not really in a contango, we're not really in a backwardation. The vol skew is flat, okay, between front and back month. And you go a little further out. And by the way, volatility is definitely pumped a little further out. You start to get October, November, you realize November, there's an election coming up. Volatility is a little pumped in here, okay? But still with a flat vol skew, look, people, you're not out of the woods yet. And that is the critical point over here. You're not out of the woods yet. You got to assume that this is still a rip your face off rally to confirm more of that. And I've talked about this extensively as of late, okay? Look at other products like skew. Okay, skew is not sounding an all clear. Skew is still elevated, which means there's still people buying out of the money puts, okay, to reduce some of the risk. Moreover, if you look at VVIX, the volatility index, VVIX still rocking. I mean, the 110 region. And what VVIX is an indication of, it's the options in the VIX. So forget about the VIX. The VIX itself is an equation. The actual VIX options are based on volatility futures, but the options themselves, their volatility is VVIX, and their volatility is indicative of hedging activity. So all I can tell you at this point is professional world. The professional world says, do not, okay, put away your volatility helmets. That is so critical. So again, forget about like inflationary data. Shift now to retail jobless claims. You know, obviously the consumer sentiment survey, the VIX contracted, but the VVIX skew, okay, is still rocking out there. You know, there's one other thing that I would also be really concerned about is the bonds. The bonds have actually rallied back up. They're like, yeah, but the bonds are rallying back up. This could very well be duck and cover. You don't know what this is going to look like yet, do you? Okay, moreover, even products like gold actually came off a little bit. And we're basically still at all-time highs over here. Okay, there's a lot to think about. Look, the next 2 days of trade, the volatility, as I said, it's still with us. It's still here. You can feel it even in the tape. I mean, anything that comes out is just downright sketchy inside of this tape. If you haven't looked at the NASDAQ, look, I don't care that the NASDAQ is massively unchanged right now. The movement inside of the NASDAQ, minute to minute, hour to hour, okay, there's just violence still left inside of this tape. And that is probably one of the biggest things I want to have resonate with you. All right, last up over here on this evening's video, I want to talk a little bit about SPX and the expected move. So in the SPX expected move, okay, big picture over here first. We had basically a $120 expected move. That basically applies to $120 to the upside, $120 to the downside, right? So there's your expected move. All right, we're home. We tagged the upper edge of the expected move. So we're home, right? So we literally tagged the upper edge of the expected move. So you kind of check that box. Now, normally when you tag an upper edge of an expected move, we kind of just resonate on there because that's where the risk goes to die. We've been very sketchy off of it. That also leads me to believe there's a crap load more risk. Okay, exactly what is the risk into, of course, the remainder of the week? First of all, by the way, look at so we're just talking about the NASDAQ getting all kinds of sketchy. Okay, I'm not joking. That's the NASDAQ. That thing was just down 24. Now it's down 57. What is that? A minute later? Okay, you can't make this stuff up. While I'm live over here, we're getting wild in this marketplace, and I am telling you, okay, the risk reward it's not good to the upside overall. Like this kind of a bounce over here, it's going to be met with some extreme sell side. And I've already got positions like an Apple, got an in-out spread bearish inside of Apple. Okay, I just got out of the TLT position today, profitable. So we were bullish inside of TLT. That happened. We're out 55% gain onward. Okay, I've stepped into a couple of different positions. HYG, that's going to be another one. There's all kinds of cool positions though you can do in this volatility. You'd be wrong one day and loving life the next. And that is what volatility affords you. But the last thing I wanted to mention here inside of the SPX is not only what the risk is out to tomorrow, which by the way, the risk A moment ago, we're talking about a $42 expected move. I'm sorry, that's elevated. These options aren't even decaying. They're actually adding volatility as we're going. So that's up to a 43 vol. But check this out. Between now and Friday, still a $60 move being implied over here. Still a $60 move. So those retail sales come out tomorrow. Okay, if that number is a miss, this marketplace is going to move absolutely huge. So keep your hands and feet inside of the vehicle at all times. This wild ride is far from over. Once again, you are under the influence of volatility. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.